Varun Beverages, PepsiCo's largest bottler outside the US, is staging a sharp comeback. From a 52-week low of 381 in late March, the stock has surged nearly 25% to 474 on Friday. There are three catalysts that is driving this move. Firstly, the summer tailwind. Crystal says that the soft drink bottlers are poised for a stronger volume rebound this fiscal year, driven by hotter summers and rising market penetration. Since 40% of VBL's annual sales come from this particular quarter, this is a very crucial factor. Secondly, VBL has acquired Twizza, the number fourth player in South Africa. So this will again drive their volume sales for this particular quarter and coming quarters. Thirdly, in the financial year 2025, the profit had risen by about 16% to 3,036 crore, and the revenue had also increased to 22,000 crore. So we can see that it is fundamentally strong company. Now, technical analysis. The monthly When we look at the monthly chart, it had peaked at around 660 and corrected 42% to a low of 381. But however, this particular month candle is strong recovery with a volume of about 680 million, the highest bullish monthly volume in over a year. So the critical support here would be around 380 to 400. We can see that the 2023 breakout had happened at this particular point. And when we look at the weekly chart, clearly there were from mid 2024, we can see that there were lower highs for about 660, 560 and 510. So this week's volume, however, is a green engulfing candlestick. The key weekly support is around 430, and it is tested twice before, and it held both times, and the resistance is around 510 to 520, the late 2025 consolidation phase for the weekly resistance. When we look at the daily chart, the the lowest point is around 420, and that is your anchor, and the support cluster would be around 445, where the buyers stepped in consistently after the bounce. The immediate resistance would be around 405 to 495. This is because this is where the stock has stalled and reversed in January 2026. And we can see that the RSI of the stock is about 70.69. The momentum is bullish but overbought. Expect a healthy pullback before the next leg. So the bottom line is that all three time frames are aligning bullish. We have to wait for the dip and we can't chase the spike. So now I'll be placing the GTT order based on this particular logic. So I'll be entering the stock at 415, at 450. So this is because the daily support cluster where buyers have repeatedly stepped in after the bounce from 381. We are not buying the current spike at 474. We are waiting for the stock to pull back to value based on that analysis. And now I'll be creating an OCO to place the stop loss and target. So the stop loss would be 415 and not 429 based on the support. This is because in swing trading, your support goes below the most recent swing below on the daily chart, which is the early April consolidation around 420. We place it beneath that at 415 to avoid being stopped out by normal intraday noise. If 415 brings, the thesis is wrong, exit is clean. So this is where we place our stop loss, and the target would be around 492 because we place our target just below the known resistance, not at it or through it. So it will be around 495. We book the profits at 492 to be very precise, of because the resistance is around 495 to 505, so we'll be placing it around 492. So we have created a stop loss and target price, and basically the risk is about 35 and the reward is around 42. That's a risk reward ratio of about 1 is to 1.2, the standard for a swing trade, where entry, stop and target are all on anchored strictly to character structure of the daily chart. So we set our GTT and we do not look at the screen continuously, and it ensures that our plan is executed. So we can say that VBL has a hot summer catalyst, Africa growth, and a clean technical setup. One level to watch is 450. So it's not an investment advice. Do your own research. Like, share, and drop your view in the comments. Thank you.